Warm welcome to all of you to exclusive webinar of Right Horizon. Good morning again to all on a Saturday morning. And the topic that we have chosen today, it is one of the most interesting topic in today's financial world of investment. And I'm sure that I will take you to a lot of concepts which will not make you bore and will give you some very good insights to help you to take your investment decision further in your decision making. So the future of alternative investments in India. So what has happened? What has happened to take this transformation of alternative investments? So we will take you to the period where what happened all in the other countries that made this investment opportunity very lucrative, and how does it is happening in India. So the growth story of India that is going through this transformation, and a lot of affluent to high net worth individuals who are getting into this investment zone. Also, we will take you to the highlights of this AIF and PMS industry, which are the most promising investment avenue out of the entire basket of alternative investment. And also, we will take you to the opportunities that how, as an investor, you can participate and make this opportunity in your favor. So when I use the word alternative, mind you, these two terminologies are quite often used बोलते हैं ना, because of each other. So there is a huge difference between alternate and alternative. So when I say alternate is like a substitute to something. Okay, so whether even in the terms of investment, you can say alternate can be you can have an alternate investment option to do, or you can have an alternate advisor to choose. But alternative is something choices or the possibilities. Okay, so it's a very broad terminology when I say the term alternative. And till now, it is very clear that which are the products that comes under the alternative. So predominantly, I think we all are aware of PMS because PMS has evolved and it is there with a track record from long time. AIFs are slightly new, but still the affluent investor and the HNIs and ultra HNIs family office are quite aware of this. So it brings me to a very interesting question to be asked. Ki, normally, as an investor, we are very much aware of mutual fund as a product, and apart from other traditional avenues like fixed deposit that were prevailing into the country. So just a quick poll we can take of people knowing ki how many investors in India would be there who have invested into an PMS or an AIF. So Sanjay, can you run a poll to take a feedback from our participants to know how many investors in India have invested into PMS and AIF? Okay, so these are the final numbers, Sanjay?
Yes.
Okay, so there are 41% of people who say that the number of investors who have invested into PMS and AIF is 1 to 5 lakhs. There are 28% who believes that number of investors who have invested into AIF and PMS are 5 to 10 lakhs. There are 12% and 17% for the other two categories of 10 lakhs to 15 lakhs and 15 lakhs and above. And the right answer lies in the option one, which is 1 to 5 lakhs. And to be very precise and approximate numbers are close to 1.6 lakhs. Okay, so there are only 1.6 lakhs investors who have invested into PMS and AIF till date in India. So out of the population of, let's say, 150 crores, there are only 1.5 lakhs people who have invested into PMS and AIF. So what this happened? Why this happened? Okay, to begin with this transmission that has we are talking about, it is very important to understand key where all this transformation has happened and it has led to a success of those countries. So we all know that we are on a phase where US and China were some years before. So it is very important to understand how the transformation has happened in alternative investments over to these countries. So we'll first start with the United States, that is US, wherein this transformation has happened a long back. Okay. So what are the criterias? How do you see the success of any country that is happening? Okay. So we believe that there are a lot of parameters, but one parameter which is very important to understand the progress of any country is the per capita income. Okay, so there is a ballpark figure, $2,000 per capita income, which gives you a certain comfort level. And once you cross this number of $2,000, there is a progress which is seen by all the countries. And why this happens? There is a reason for it. So once you cross this, first of all, let us understand what is this per capita income. Okay, so per capita income simply signifies and shows you the kind of quality of बोलते हैं ना quality of the people that are living in that country. So it is like income of the people of that particular country. So the dollar 2000 mark, when you say you cross it, people have a lot of surplus money to invest or to spend into the discretionary things that they want to possess. Okay, so we have seen ki whenever this transformation has happened in any country like US or China, there has been a growth. So if you look at this chart, it shows the number that once the GDP crossed by US also, you have seen a certain surge in export and import, and the consumption begins. Okay, and when this consumption begins, there is a demand for a lot of such discretionary products and services, and also in the terms of investment, people look for this nuanced product so that they can have a better kind of an avenue which they don't when they which they never had as a traditional avenue when they were investing. So if you look at key even in US, this transformation, even though they crossed this $2,000 per capita income in 1950, but the story had begun long back. Okay, so it is not actually 1950. 1950 was the trigger point, but in 19th century, US was also a agricultural country. Okay, so they got certain advantage of producing cotton. Okay, cotton was on a high demand at that point of time. There was a lot of industrial revolution that were happening, so there was a huge surge of cotton which came in, and US got that competitive advantage, and it became a largest exporter of cotton to the world. Okay, so this was happening, and gradually World War also gave a lot of boom to the US as a country. So in that period of 19, if I'm remembering, 1916, yes, it was the best period in the history of US stock market, because World War One, US did a lot of things on giving the war both in products and all to the other countries. So they flourished from there. If you look at the period from 1890 to 1910, before this thing happening, it was growing at the rate of 4%. So what all this thing shows and gives you a reflection point, कि once you reach, people actually start looking at you once you cross this number and you see the progress happening. But a lot of things happened before that also. The same thing if you look at the China. China crossed this 2000 ballpark figure of per capita income in 2006. But before, long back, before 2006, they had started those things happening, and it helped China after this inflection point of 2000 in 2006. Okay, so what China did? Okay, China did a lot of policies towards. They opened up the economy. They came out with a lot of FDI regulation changes in that, and China got a lot of money from outside, and it became a manufacturing hub. Okay, population also helps. So if you look at the demographics, people usually talk that we are same like a China. Okay, but although we have crossed China with a big margin, but the same way when China was also growing, things were happening. Okay, so the same phase has started with India also. So India, what happened to India when we looked at this two example? So we have seen ki the context to explain these two things was that ki we are also on the same bolte na kind of a roadmap. So what happened in India, we will see with the further slides that how is India going to benefit when it crossed. So India crossed this $2,000 per capita income in 2021. Okay, so what happened? What happened after that is a sign that we have to check, and what India had done before that to come to this thing and how it will grow. So you will have seen ki what happened in India ki in last 5 years when the entire world was struggling with a lot of things. Okay, the world was struggling with recession, the progress was not happening, the GDP was not moving, but India was growing very consistently. It was because of a lot of things that happened. So there are a lot of pillars that helped India to grow. So out of which are the major three pillars which made India to grow to this level is first of all the global offshoring. So India was able to take this global offshoring on its records, and was able to take benefit out of it. There was also a digitalization, which we all have felt that it has helped India to grow to this limit. And also there is a energy transmission. So there are a lot of things which and what that helped. It helped that if you look at there is a growing segment of HNIs and ultra HNIs. Now, how do you define HNI or a ultra HNI? So for a basic definition of an, if you look, there are a lot of definitions for HNIs and ultra HNIs. So if you look at a basic definition, anybody who has a 10 crores kind of an assets is an HNI, and anybody who has an 100 crores of assets is an ultra HNI. If you look at the graph, the way it has moved, okay, from 2020 and the way it will move till 2026, you have seen ki the ultra HNI segment will grow with 39% and HNI segment is growing by 75%. Okay, so what this will lead? All these things, when this extra money, extra set of investors, the wealth in India which is coming and the wealthy Indians, there is a need for such nuanced product. Okay, because and why there is a need, we will be covering up in the further slides. But this need has occurred because of what a lot of reasons. Okay, so first of all, we will cover that how, if you look at all the segments of investors, okay, or rather people with the per capita income, if you look at the, we are rising in all the pyramids. Okay, so if you look at the bottom of the pyramid to the top, you will see the percentage is growing and also the number of people are growing. So if you look at the amount, if you look at the ballpark figure, 5,000 to 10,000 or 10,000 to 35,000 or about 35,000, and if you look at 2031 figures, the figures itself reflects that how are these segments of people who will increase in a country like India. So again, the number of millionaires and billionaires, if you look at the number per thousand, if you look at India, when it crossed this $2,000 per capita income, the number of investors with India were 7,65,000. But when you compare it with China when it crossed, this is the number of 2020, but China when it crossed 2,000 per capita income, its number was only 4,15,000. So India is already much ahead on this ballpark figure, and I think there is a good way ahead for India to grow in the terms of those investors. So now why there is a need? Okay, so we talked about key what is the things that has evolved, and but why is the reason for this alternative investment? Why investor felt that key there is a need of some other asset class which can give you a better return? So what happened key people who are there into investments, or people who have been into this industry after 2008, there were a lot of reforms which came into the investments segment. Okay, so the people, when they observed post 2008, the active funds which were available, or the traditional, forget about the traditional investment, the active funds which were available for investment were not able to create those kind of alpha which was the requirement of the investor. Okay, and the investor felt that key the cost of the product was the same, so it was not changing. So rather they preferred investing into the passive funds. So there was a sudden shift, if you ask, from 2015 towards passive funds. And if you look at the industry has folded manifold. So the industry of passive has grown to a remarkable figure because of this. So people felt that at least we will be able to get the benchmark return or the index return, and with the lower cost. So there was a sudden surge of passive funds coming into the industry. But people felt that there are other asset classes, a diversification need was felt by the investor fraternity, and they felt that there was a demand of asset class which was not available to the investors to the traditional avenues, or rather even with mutual funds. So this gave surge to a lot of other avenues which was called as the alternative investment, where people were not able to invest and now they are able to invest, and rather they are also able to create, because there is always a risk return matrix. So if you take this asset class broadly, if you look at the kind of investment avenues that are available, so it will be right from if you look at private debt, there will be an infrastructure, private equity, hedge funds. So there are a lot of things which were not available from the investment vehicle that were available in India prior to this. So what happened, and this will keep on growing. So if you look at what the kind of the things that I showed in the last slide is clearly visible from this slide. So if you look at only from 2020 to 2025 and rather beyond, the asset class which has grown in the investors both in a pool of investment, if you look at is direct equity, alternate investment, unlisted, and international assets. Okay, so if you look at, apart from mutual fund, the asset class which has grown and the traditional avenues like insurance, pension funds, if you look at it has not actually grown to that extent. And this is very much visible from the from this slide, which is a very interesting slide which gives you the entire clarity ki how things have grown into an HNI segment. So for a mutual fund, just to make a point over here, the mutual fund equity HNI that has been mentioned, mentioned is investors with 5 lakhs and above investment, because as per the definition of mutual fund, 5 lakhs and above is categorized as an HNI investor. So if you look at the CAGR growth of the investor fraternity into these segments like AIF, PMS, and mutual fund from 2015-16 to 21-22, you will see PMS has grown. PMS has grown from 1 lakh kind of 1 lakh crore to around 26 lakhs crores kind of a thing. If you look at the AIF as a whole, so on the left hand side you can see category 3, on the right hand side you can see the category 2. So combined together over there also it has crossed close to 10 lakhs crores. If you look at the mutual fund, it has reached 55 lakh crore. But if you look at the growth rate is far lower than the alternate assets. So PMS, kindly just consider, because here we have mentioned from 2015, but if you look at below, it is 1 lakh crore to 26 lakh crore. So what all these things show? So just we will run a quick poll ki according to you, which are the investment avenue which will give you the best return in next 3 to 5 years. So we have considered a broad categories over here, that is mutual fund, PMS, AIF, and others, so that when we take it forward, that why and how this product will make a difference to your kind of a goal of investment, we can take this poll quickly. I think this result was as expected. It is very uh, evenly distributed to all the avenues. So clear edge to mutual fund. People, 25% of people believe that mutual fund will be the best investment avenue in next 3 to 5 years. A good set of 38% of investors feel that the PMS will be the best tool of investment in next 3 to 5 years, and AIF will be the have got 30%. Still, AIF has got a very good kind of preferences. So I think I will stop sharing and I will take the next slide. Okay. Okay, so again, I will try to reiterate on things. This poll was just to understand the requirement that is there as a product class. But again, we have to go back to the same thing, that alternative is a choice. Okay, it is when we say mutual fund, PMS, AIF, I think all the products are very important for any investor. But it has to be considered as an asset allocation. So this mutual fund, PMS, AIF complement each other. They are not a competition to each other. But the affluent investor, there is a need of a different kind of a thing. So that is the reason the things have involved. So now, so what is the need? What do an HNI or ultra HNI segment of people, or rather a family office kind of a category, what they want? What is the need of today's investor? Okay, so broadly, what we have understood from the survey, there are only two objectives that people look. First is the wealth preservation. They want to preserve whatever they have with them, and at the same time, they want to grow their wealth. These are the two simple philosophy which any investor seek. It may be then added or combined with a financial planning or a wealth manager or any kind of those support, but these are the only two criteria that an always an investor look for. Okay, so now what in this, why there was a need of alternate investment? When I say my wealth has to be preserved and I want to grow my wealth, what was the factors? So if you look at the left hand side, the first and foremost reason that came, and that we also discussed in the previous slides, that since traditional avenues were not able to create the kind of alpha that was expected from the investor, so you see that the need of alpha was the major requirement which all this category of investors said ki there was a need of alternate investment. More than what I personally feel is, more than the returns, the diversification was the major reason that was felt, and that made to come out with this category of alternate investment. Because see, traditionally, what were the vehicle that you had for investment? You had one, apart from all fixed revenue like FDs or post office or KVP, all those products, you had only mutual fund. Mutual fund was only invested into listed securities. So, and that too with the size growing, they were it was difficult for them to beat the benchmark and all those things. So those are things that we will cover in the next slides. So diversification was something a pull or a vehicle where I am not able to invest. So let's say if I am saying India is a growing country, okay, we all know that. If I want to invest into, let's say, Worli Sea Link of Mumbai, what are the avenues that I can invest? So there are no avenues other than AIF which can give you that participation with that that customization, with that transparency. So there are a lot of things in the terms of diversification. A VC, a venture capitalist, let's say a person who has just startup. Okay, he may have an option to get some funds, but maybe let's say he has a bad round, or he needs some cash burn. From where can he get the money? A financial institution like bank will not give him the money. So what are the option for him to raise the money? And same as an investor, if I want to participate, we have already seen that there are so many unicorns. We have become I think third largest economy in the terms of startups. So if I want to participate in the startup till the time it gets listed, what are the vehicle for me to participate into that? So this alternate investment is giving me all those options to capitalize on this. So again, emerging opportunities that we already discussed. Reduce overall portfolio risk. It is very important. I think there is a slide wherein we are covering what is the volatility and what is the returns that I'm able to capture with this alternate investment. So if I have a combination of my investment pool like mutual funds, alternate investment, PMS, and so what is the kind of alpha I'm generating with the risk that I'm taking? So it's a very interesting. And last is the volatility, which we have already discussed. So let's start with PMS. Okay, so we have seen that key how this alternate investment has evolved in the various countries, and now it is happening in India. We have also seen the benefits of this alternate investment. Now let's consider and talk on this one avenue that is called PMS. So since for the benefit of the crowd, let understand what PMS is. Maybe a lot of people looking at the poll, I understand that they know about the PMS, but PMS is something. What is the advantage that you get when you invest into a PMS? So first and foremost, the advantage that you have is your personalized curated portfolios. Okay, so you get the investor knows that it is not a pool of investment. It is a separate both in a basket that has been created into his own demat account, and he is able to see the stocks which are bought in per se directly into his demat account. So what are the other benefits that you get when you invest into a PMS is like it is a very transparent, the most transparent both in a kind of an investment avenue which is available is transparency in the terms of your you can talk about brokerages, custodian, your whatever. SEBI is regulating PMS to the both in a greatest extent, and so what we are trying to see that ki people get a lot of transparency, and HNI investors when they were investing into mutual funds and all, they were not able to see the transparency that they get into the PMS. The most important thing is the experienced fund manager and the concentrated portfolios. So since here the industry is small, you get a very both in a customization, and you also get a very concentrated help or towards your portfolio from the experienced fund manager. So there is a tailor-made approach that is happened, and it helps you to create your wealth better than the mutual funds. And then there is an engagement. So how this has evolved, okay, how this industry has evolved in the terms of growth. So when I'm discussing here more than the product, the highlight is to see that how these products have evolved and why there is a need to be part of this growing investment category. So if you see, we have discussed this in the past also in the previous slides, that the AUM of PMS has grown 6x, and it is expected to grow by 6x by 2031. And the growth till that what has happened is 23% since 2012. Okay, so if you see the growth, we all have seen the evolution which has happened in the terms of PMS. So why people before coming to AIF, when we are discussing on PMS, why there was a need to invest into a PMS? Why matlab people were investing previously into mutual funds? So if you look at ki what has happened, there was a data which came in ki how mutual fund has performed over a period of time. So if you look at key number of funds, this is a not the entire basket. There was a survey done. So this is a part of that survey. So if you look at those surveys showed that key in 1 year, 3 year, 5 year, and 10 year period, if you look at the number of mutual funds and the number of funds which has outperformed the benchmark, if you see there are only 50%, even close to 50% is only in 1 year. Rest all are less than 50% who were able to even beat the benchmark. Okay, so though people felt, the investor felt ki that is the reason ki they wanted to look for an alternate investment, which through PMS. So if you look at into PMS, again the same period, 1 year, 3 year, 5 year, 10 year. If you look at, there are more than 70% of the fund managers who have able to outperform the benchmark. Now, please understand ki this phase of 10 years was from the phase of the evolution and till today. Okay, so if you look at the numbers on 10 years, so if you count on 10 years PMS, there will be hardly 50 60 strategies that were operational. So if you look at out of that, if you look at 80% of fund managers were able to outperform. So you can understand, and these are relevant from the fact also. If you look at in per se to the name of the funds, if you look at the PMS which are there in the 1 year category, the lowest one which is there, that is 73%. And if you look at the mutual fund, the highest which is there is 59%. So you can clearly see the edge ki why there was a need of this alternate investment. The same applies to 3 year category also. So when you look at the again the least category, the last fund in the 3 years category, which is 41%, and the highest category in the 3 year return is 44%. This is CAGR. Okay, again with 5 years. So this is if you look at 10 years also, the last in the list is 21.69, and the highest in the mutual fund category is 22%. So this was a clear edge that people felt कि there is a need of PMS investment to be invested, and people have been investing, and that is the reason this industry is growing. So any investor as a part of allocation should always have some allocation, and in fact, this is now has become a mainline investment for investors. It is not a allocation kind of a product. So there are a lot of people who are taking it as a frontline, more allocation in PMS than mutual funds, which is happening. Okay, the second category that we talk is AIF. This is a very broad category, unlike PMS. Okay, so PMS still they are restricted to stocks. Okay, so they will be investing into the listed securities. But here the option becomes more open. When I said diversification, I think this is a clear product which gives you a diversification to the vehicle or to the avenues where you were not able to invest through listed securities. So if you clearly see the private equity, venture capital, private debt or alternate debt or a hedge fund, all these products, the investment vehicle, they invest into those avenues which was not available through mutual fund or PMS. So if you look at why this was required, again, this is again the experienced fund managers are there who adopt this sophisticated strategy. We will cover this in the further slides, and how they are able to grab those opportunities and give it to the investors. And with those thing, how investors have benefited, we will take it with the further slides. Okay, so this is the trend we saw in mutual fund, the trend we saw in PMS. This is a trend which is there ki how global alternatives is going to hit $23 trillion by 2026. So if you look at the right hand side, there are the categories of investment that happen. So if you look at the infrastructure or a private debt or a real estate or a hedge or private equity, the way it is going to grow till 2026 is giving you a lot of scope that you have to participate. Otherwise, we are going to miss out on certain things. On the left hand side, if you look at, these are the asset allocation across various alternatives that has happened. So this is the if you look at the hedge fund in 2018, then in 2019 till 2021, you can look at the growth that has happened. And out of this, if you look at two segments, that is private equity and private debt, is growing with a both in a larger scale. So these two segments, and why this is happening, this two space we will cover in the next slides, ki why this private equity and private debt space out of this all other avenues is growing through a such a bolte na high scale. Okay. So when we talk, it was always considered that alternative investments would be a part of allocation into an investor's investment. So if you look at this rising or bolte na kind of a change which is happening, and this is the most interesting slides, the change that is going to happen. Now no more this alternate investment are like a niche segment wherein a person looks only 2%, 3% or 5% allocation. If you look at this, the growth, it is 5 to 15% of allocation, this has come to 9%. If you look at more than 15% allocation, this trend is changing. So more and more people feel that they want to increase the allocation in what these slides try to say. So if you look at the right hand side, when I say investors are happy to get more allocation or increase their allocation into AIF, there are also fund managers who are very confident and they feel that they can invest that amount, because if you look at the more than 20%, people are able to, fund manager feels that they can raise up to 5,000 crores. And so this gives the confidence in the eyes of any investor or in the eyes of any fund manager to see the progress that is happening towards AIF. So broadly, if you look at AIF, there are three categories of investment. Okay, so if you look at the growth of all the categories, so first of all, what are these three categories? So if you ask category three is more towards listed securities. Okay, so when I say listed, so what is the scope? But in listed, they still have an option to invest up to 49% into unlisted. So where I get this opportunity, so category two is the most upcoming and the growing category. But category three, when I say I have that leeway or I have that thing, there are a lot of other things, benefit that a fund manager gets. The first and foremost benefit that a fund manager get is the flexibility. So when you are investing through a mutual fund or something, those avenues, a fund manager don't have that flexibility to bypass a certain sector cap or a stock cap, wherein here the fund manager has the flexibility to bolte na take care of those things. Also, like I said, ki it gives you an option to invest also in unlisted securities. That is an option, but usually in this category, people don't go for unlisted because you have category two for that. Also, along with this listed securities, there is also bolte na long short strategy that people play in category three. So long short is a very complex product, but it is liked by HNI. The tenure of the product is maybe typically 7 year plus, but it gives you a lot of edge for investors who are looking to those complex strategies. There you can also play with derivatives, which you don't do into the listed one kind of an option. But derivatives, people do a lot of strategies over there, and the risk return metrics over there is quite good. So if you take those risks, so you need to be very aware of all this product. So maybe when we keep on doing the series of on this alternate investment, in the next series, we will try to cover up the products in detail, that how these products are going to help and what are the, because these are complex products which needs a lot of time to understand. These are a broad definition or the broad idea of the products I'm trying to give on the with this presentation. So category two is more towards unlisted. So this is the category which is gaining a lot of bolte na appetite from the investor, and it is a clearly because of the reason, since they invest into unlisted, so people feel that this is one bolte na kind of an avenue which they were not able to participate when they were doing the investment through mutual fund and PMS. So this is the most upcoming, and so there are a lot of things. There are a lot of startup companies who lead you can say pre-IPO. Okay, so you want some participation in pre-IPO on a startup or a growing phase. Early में तो you have all those things. So category two helps वो बोलते हैं entrepreneurs also, at the same time investors also, to participate into those investment pool. At the same time, category one is purely it is towards you can say startups. Okay, so it will be a VC kind of a funding and all those things. So it helps over there. So now important is to look at number of funds that has been launched in all the categories. So if you look at again predominantly, you see that category three has already doubled almost from 10 funds which were launched in June 2013. Now people are able to launch even 20-30 funds in category three. But category two, which I feel and we all know that has grown, here you see that there were only 23 funds which were launched in 2013, but in 2021 and 22, if you see, it is reaching the figure of 100 kind of funds which are getting launched, and same is category one. So we can also look at the contribution which has increased. Okay, so if you look at the contribution which has been increased into this all categories, is from if you look at this are in crores. Okay, so 5 lakh crore, it is able to already, the people have already given the commitments of the amount that will come into this category 2. And now if you look at category 2, it has already bypassed mutual fund category of debt fund of HNI segment. When I say HNI, again, those 5 lakhs is applicable. So this, if you put together category 1, 2, and 3, the industry would have reached close to, this is slightly old figure, the industry has crossed close to 10 lakh crore kind of an thing. Sanjay, how much time we have?
So we have around 20 minutes now.
Okay, so we'll keep last 5, 7 minutes. I will try to see that. Okay, so this is the growth of investment that has happened. So if you look at PMS is growing with 20% CAGR, AIF is growing by 55% CAGR, and again that is category 2, and category 3 is growing by 44%. So these avenues are clearly showing their surge from the investment fraternity to have more and more participation through. So what is required? Matlab, what there are certain things to be considered while investing in alternatives. Okay, so since these are very complex product, it is very important to understand a lot of parameters which are there, which can come into the things. Okay, so you have to also understand the risk kind of an thing, because since it is a complex product, the regulator is putting a lot of efforts to regulate, and there are a lot of reforms which are coming. Like mutual fund is a evolved product. Okay, so at least you have that confidence that everything is there. But over here, there are a lot of reforms which are still taking place. PMS, again, it has evolved and become one of the most transparent avenue of investment for an HNI, ultra HNI, or family office segment. And the same is happening with AIFs also. So in AIF, again, it is a very important to understand the risk measure. The liquidity is the very important factor to be considered. But what is happening over a period of time, which are the main reasons that people look at while investing into all those things? I think first and foremost important is the trust. Okay, so people should have trust in the AMC. Okay, wherever they are investing or through whoever they are investing, a trust has to. And how is trust created? It is created with a lot of parameters. The first and foremost parameters people look at is the track record. Okay, so when you have a certain track record for a particular revenue, you start building your confidence and you start taking certain steps to participate into those avenues. There are also kind of engagement levels that the or the communication level or the transparency level that people or the AMCs do to convey that what are their philosophies and how they are going to take utmost care to take care of their investments. So there are a lot of such developments which are happening. In fact, a regulator, I think SEBI is playing a very important role, and it has been doing in all the segments of avenues that we talked about. And I think in AIF also, the more and more it is happening. Like they are talking to come out with a direct mode even in PMS and AIF. So there are a lot of revolution that will happen even going forward, and it all will benefit the investor as a whole. So okay, so as and when you grow, so if you look at the what are the next legs of growth for this avenue, so people are learning. Okay, still if you look at AIF, these are at a very nascent stage, so they are learning from the global experience, and we are capitalizing on that. And since we discussed that India is going through a lot of structural changes, so again, such demands will keep on rising. Okay, so and that is already been evident from the thing, the way industry is growing. So there is a demand, and people are able to cater that. Also, there is an emerging opportunities like distressed assets, and there are a lot of things. This is in per se to AIF. So like special situation funds are there. They are able to help out. So this has evolved as an ecosystem. Okay, so it is helping India to grow. So it is going hand by hand. So people are able to participate in this growth story because of all these avenues, and at the same time, it is helping also India to grow. So because all these people, all these avenues in AIFs, they were not able to. So anything that is happening is people who are not able to take the money from the banks. So banks has a limitation to it. It reduces the pressure on the bank to to facilitate or give the engine the bolte na kind of oil which is required. So which is happening this by investor fraternity. So again, if you look at there are the information is available. Technology has evolved, no doubt about it. But there are also information available. Previously, you were not having information on PMS and AIFs. In fact, if you talk on the numbers, there can be a lot of statistics that we can talk on the PMS itself. If you talk, there will be more than 400 PMS fund managers, and at the same time, there will be more than 1,000, 2,000 schemes. So if you want to select a PMS which is best for you, it is very difficult. So there are wealth managers, there are everyone. So there are a lot of things the people, the industry is evolving. So it is helping you to take a very rational decision that which fund manager should I opt to. AIF again is a very new. So just there will be no lot of data that is available for AIF. Okay, it is also because an evident that AIF mostly you will see the returns in the later stage, maybe 3 years, 4 years, 5 years down the line. So till that, what it is very important to educate and inform investors. So institutionalization of this is will be the key driver, which regulator is actually putting a lot of efforts to bring the transparency in this avenue, and so that it can help investor. So with this, I think I will end my presentation, and will keep on open for question and answer for the time we have, and we'll see that key whatever question we can answer ASAP. Okay, so I think this was the questions were coming during the presentation time, so I was not able to see. So there is a question that what are the avenues available for AIF to invest, and how can, as an investor, I can invest into an AIF? Okay, so we have already explained that there are three categories of AIF to be invested, and category one, two, three, and also we have given the specification ki category three is more towards listed, category two towards unlisted, and category one towards startup VC. Okay, so the thing is, uh, to invest, or rather it is very important to first understand the risk profile and the overall investment that you are holding as of now. So I think we have a team, maybe Sanjay, we will take this and you can share with the wealth manager, and I think we can help you to select the AI which is good and better, and also we will help you on the other avenues that you can invest to get the returns that you are expecting. Okay. Again, with connection to the same thing, there is another question again, ki how can I invest into an AIF? So I think there are a lot of appetite which is coming for an AIF then towards the PMS, because I think PMS, a lot of things is already there, and being Right Horizon, we have an in-house PMS. So I think a lot of people who have been into this, they know the products and all. So who is the regulator is one of the question in AIF. So again, the regulator for AIF is the SEBI only, who is the regulator for um, but again, there are certain components of real estate which comes in. So when I say alternate, REITs and InvITs are also the part of this thing. So somehow there are those things also which comes into the picture. Okay. There is a question also, how many PMS for private equity companies based out of India is working in India? I would like some like Fidelity, Apollo, and but no idea of Indian one. Okay. PMS for private equity on the regulatory, still now it is not happening. It is only for public equity which is happening. For private equity, the vehicle is AIF. That is the best vehicle to participate into the private equity, and that is the major reason that why people have come, because public equity and all were available direct as a direct investors for the direct investors also, but private equity was not available. So private equity and private debt are two major thing that is happening. And why people see the basic thing is why people go for companies go for private equity or a private debt. So even there are a lot of requirements of the company which comes, because if somebody don't want to dilute their equity, okay, so they want to raise money through debt only. So what option they had previously to raise the debt? It was only coupons, or a bank. They used to go and they get the fixed coupon, give the fixed coupon and all those things. But again, when it comes to an AIF, there is a lot of बोलते हैं ना, kind of a product that can be launched. So okay, so I can launch some product with equity upside. I can launch something for बोलते हैं ना, kind of a special situation fund. So there are a lot of things which people were able to give, and similarly for private equity. So there are a lot of things as a private equity. If I need something where I'm not able to get from the financial institution some money, so I have to raise it through private equity only. Again, a new startup, from where he will get the money apart from the बोलते हैं ना here and there. So it is a private. So there are a lot of things which private equity and private debt will again keep on gaining from the growing India. How is the taxation of AIF 3 category? Okay, so it's a good question. I think AIF 3 category, since it is a listed one, so the category comes with the equity taxation only. So AIF category 3 complex is the category 1 taxation, because so category 3 is equity. How PMS differs from general portfolio management, which normal fund manager in India refer to with respect to equity debt And I think questions are increasing. Sanjay, how much time we have?
Sir, we have around 7 to 8 minutes with us.
Okay, fine. Okay. Okay, a basic question, how much investment required for AIF and PMS? So it's a SEBI threshold ki PMS needs 50 lakhs of investment and AIF needs 1 crore of investment. Okay, always tough to select outperforming PMS or AIF as shown in your slide, 75% only outperform. Yes, sir, it is obvious and the way industry will grow, and that is the reason it is very important. In fact, I had covered a separate webinar when is how to select a fund manager. Okay, so it is a very interesting thing that you asked, ki how do I select a PMS fund manager or an AIF fund manager? So yes, I told few things that you have to consider. Ki whenever you are going for a fund manager, first of all, it is very important to take the help of the advisor because there are 400 plus. I already said ki there are more than 400 plus PMS houses. When I add to the schemes, you can understand what will be the number going. Again, towards AIF, we have already seen ki how many funds are getting launched every year. Okay, it is already growing at 6x kind of a return, बोलते हैं ना, number of funds will increase. So there will be complexities to choose the fund, and that is the so before selecting how to choose a fund manager, it is important to see how to select a good advisor. So there are so many advisors available. So in fact, we can help you to understand ki how to choose a fund manager and also how to choose a wealth advisor. And I think that can help you to select the best fund which can outperform. And see, outperformance will always depend upon the process. Okay, the framework that any fund manager follows, and that will always reflect in the a kind of a time zone. Okay, so when you say that when I showed that 10 years returns, you were able to see that 80% of the people were able to outperform the benchmark. So when I say 80% people were able to outperform the benchmark, so they had certainly followed certain process, and those philosophy helped them to create those kind of alpha for such a long period. The numbers also, when you saw, it was only 50 odd strategies that were there with a 10 years track record. So it is very बोलते हैं ना, prominent to see that कि how do I select those fund manager, and you can always take a help of an wealth manager. So we always say that you should always have a sarthi with you. Even though when we look at the Mahabharata as a context, Arjun was a बोलते हैं ना warrior. Okay, nobody would have beaten Arjun any which ways, but still he needed a sarthi like Krishna. So always choose a right advisor who can help you to um, reach you to the your goals. Like PMS Bazaar, is there any some website which gives reviews of AIF? So yes, Sumit ji, there are also other to be very precise, there is a PMS AIF World and there is an AIF PMS Expert. These are two another companies which gives you an idea on AIF and PMS's funds and all. Also, they keep on keeping a lot of webinars and all. So those are very educational. It gives you a lot of insights on those both the categories. Are dividends received by PMS tax free, like in the case always when it because it is coming to your directly to the demat account? So yes, the whatever is applicable to mutual funds is also applicable to the PMS. The only difference over here is the long term, short term. Okay, so in a mutual fund, when you redeem, then only you have to pay a short term and long term. But in PMS, since it is in your demat, so investor has to take care of that long term, short term capital gain which arises. But again, as the product feature of the product, there is a risk return profile. So with this all certain बोलते हैं ना kind of compliance taken care, you will also able to generate higher alpha in all those products. Can I start PMS and AIF? Okay. Can investor exit PMS fund in case of urgency and AIF? Yes, PMS so subject to exit load. You can always, there is no lock-in. But in AIF category, there are lock-ins in certain categories because since those investments are done into a long बोलते हैं ना kind of a gestation kind of an avenues, like if some infrastructure fund is to be funded and all those things. So the liquidity can be a concern. But yes, there is an option that if you have another investor, you can can transfer the units to his account, and that is possible, and that is also happening at this point. So at times there are certain theme which people were not able to participate, so now they want to participate. At the same time, there are few investors of those themes who want to exit from that fund, and those transfer can happen. So yes, it is possible, subject to those conditions. How can one start the PMS and AI fund? So Anurag ji, yes, we will come back to you. So first, there are other things to be considered. So it's a simple, like there is no complex onboarding complexities for the product of PMS and AIF. But the eligibility criteria, yes, on AIF, there are certain eligibility criteria because it's a complex product. So there are certain things that has to be considered. Names again of AIF websites. Okay, so it's a PMS AIF World and AIF PMS Expert. So Shweta ji, for your question, is there any lock-in period we have already considered? Okay. So I think Sanjay, we are done, and I think I have finished first time on my time. So I think I will thanks again to everyone, and will urge that key to look at and deep dive into this. Allow us Right Horizon team to connect you and explain you more on these products. And as the slide says, a line: the future belongs to those who prepare for it today. So yes, you need to participate in these two categories to create that wealth. The country is going to grow, there is no doubt about it. And how do we participate in this growing India story will depend upon the investment vehicle that we choose to invest.